The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Monday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We kick things off a shortened trading week with some lovely turkey and Thanksgiving coming up on Thursday. We got a half day on Friday. It's one of the few days that we're closed at TFNN when the market's actually open. Half day on Friday. One of the reasons why the market does that is that they got to be open, because it can't be closed 4 consecutive days, and that's the problem when Thanksgiving falls on a Thursday. That's why you get some half days in the holiday. Per regulations, they want price discovery. They want markets open, so we'll get a half day on Friday, usually one of the lowest volume days of the year. But we got 3 trading days, and we pick things up in positive territory with the S&Ps up by 37 points. How about it? 66.57, and you see a little volatility in the overnight session, right? Down 40 points, up 40 points, and we're positive by 36 points, up by 0.6% in the S&Ps. NASDAQ 100, quite the volatility last week. Thursday, you trade from, you talk about a move, man, 1,300 points, 1,400 points almost. Thursday morning at 25,300, you make it to 23,009. Guess what? We're up 600 plus points from those lows, and we're up by 215 points this morning, or 0.9% in the green. The Dow up 0.25% right now. Up 115 points, 46,437 in the Russell, up by 0.3%. Bitcoin, quite a reckoning last week. We get a little bit of a bounce from weekend trading. But how about that for a daily, right? Look at the volume that came in on Friday, man. Whoo-wee. That was a sell-off, folks. You put things on a weekly. How's that for some selling on Bitcoin? Okay, just blows apart anything we've done since you back it up to the lows of the tariff volatility of April. Okay, and it just crushed everything. I mean, we had some selling off of the highs. Nothing compared to last week. This week, going to be an important one for Bitcoin. Bitcoin up $1,300 to kick it off at 85,975. Ethereum, how about the selling in Ethereum as well? Not as pronounced as Bitcoin, though, right? You take a look at Ethereum versus the volume. Bitcoin, just massive selling. Ethereum up by 2.5%, up $68 to 28.06 right now. We jump over to crude. How about that for some lower price? You check it out on a daily. Crude. We had some selling in the last few days on crude. Lower prices. We're trading right now basically flat at 58.11. Now, we already got some Fed comments again this morning. You got a little volatility to the upside in yields. But yeah, you're talking about up 2 ticks right now, 4.04. Love the volatility in yields. Market just can never make its mind up. Look at that volume on the 10-year on Thursday and Friday. When you got higher price, lower yield, we got some Fed speak. And yeah, Mr. Waller said he's advocating an interest rate cut in December due to concerns about the labor market. Why not? Let's pull it over, and then we'll talk about yields. We'll talk about the dollar. My concern is mainly labor market. That's what you want to know, folks. They got 2 mandates. They're always at odds. Okay? Not always. Everything's not always. But they are at odds, right? Restrictive, accommodative. Well, guess what? His concern is labor market, okay? You may see a more of a meeting-by-meeting approach once you get to January. He's putting that out there, and they're talking about the odds. And yeah, pretty dramatic shift as we're now at almost an 80-20. Check it out. The odds of a cut, 77.7. Play those sevens, folks, versus 22.3. The odds of a cut, pretty remarkably a week ago, that was 60-40 in the favor of no cut, right? That was a 3-2 favorite, no cut a week ago. Now it's a 4-1 favorite of a cut. Excuse me, you go to January, and the market's saying we're going to be at 1 cut by then. So now you're expecting a December cut. You're expecting a pause in January. But yeah, Waller said the latest data suggests the labor market remains weak. though he added a flood of delayed economic reports to be released after the December gathering could make the January decision a little bit trickier. Maybe it'll make it simpler, right? Maybe we'll get all that data and it'll be super simple. We'll find out where the data has been. You're going to get that data December 16th. November data on consumer prices, December 18th. How's that getting ready? Imagine if that shows inflation. There's a lot of volatility coming down the line. Doesn't mean markets are going to fall apart. Keep saying it, but we got some volatility. There's a lot of unknowns in this market. The Fed trying to navigate a weak labor market at the same time. The inflation numbers are pushing 3%. We're light on data. That could create some exacerbated swings as we come to find out what that data actually says. So with that as the backdrop, you got the 10-year up by 2 ticks. We got a 10-year yield of 4.04 right now. Looks like a cut. More of a probability, at least, than it was last week. And yet still, we got the dollar above 100. Now, I just showed you, right, where odds were even a week ago. Okay. We have a higher likelihood of a cut over the last week, and the dollar has still found strength. Now, this area of 100.50, 100 basically, the upside, yeah, we're pushing up against that area right now. That's been an area, when you back this up, let's put it back even a 5-year. There you go. All right, an area of support just turned into an area of resistance. We're bumping up against that level right now. But even with a little bit of lower yield, dollar behaving so well. You look at the run that we've had since the week of September 15th. I think that low there was the 17th. Is that correct? Yeah, it was the 17th. And then you take a look at yields. Dollar's got some strength on it. There's the 17th right there. So we did get a brief spike. That was a Fed day in terms of higher price, lower yield. But look at this. The dollar was at 96 back then. And meanwhile, we got the 10-year yield still pushing about 4%. And we got the dollar now above 100. Dollar's got strength in it right now. You jump over to gold. And yeah, that's also part of the reason that gold struggled a little bit. We've had a dollar pop from 96 to 100. You back things up to where? Remarkable, right? So there's September 17th. So even as you've had the dollar strengthen, we've had gold strengthen, and you've had yields pushing 4%. From that period of time, the dollar strengthened from 96 all the way up to above 100. And meanwhile, gold continues to remain well above 4,000 at 4,080. All right, tech stocks accelerating higher, and let's jump around to some of the Magnificent Seven. You got NVIDIA shares. Boy, the main event last week, and quite the sell-off on Thursday after their pretty decent earnings for NVIDIA. You're kicking things off up by about $1. NVIDIA at $179.82. Amazon's up $3. You do some Black Friday shopping yet, folks? They get some good sales out there. Walmart, Target, Amazon, all of them. Black Friday sales going on all week. Should be getting paid for that one. Microsoft shares are going to be up by about $1 right now. You jump over to Meta. Meta up $7 in the pre-market. Google share has been on a tear recently. Not stopping. Up another $13, folks, for Google. Man, that equity. All right, markets in the green. S&P's up by 50. NASDAQ 100 up by 265. We're coming right back, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. S&P's up by 45 points. We're trading at 66.66. NASDAQ 100 up by 244. 1% on the dot, 24,549. You jump over the VIX. Quite a spike last week and a little bit of a volatility dropout so far this morning. We got the VIX right now all the way up to 28 a couple days last week. You check out the VIX this morning, 22.44 right now. Down about $1 as markets proceed to higher territory. And it will be a thin week of volume. You know, you come into Wednesday. Now, many times, okay, the market can be a dull, right? You catch a little bit of a trend. Everybody gets fat and happy into Thanksgiving. But one thing to keep in mind is that when you have less market participants, there's actually a greater chance that you can have outside swings because less participants means less people, okay, and less buyers and less sellers that sometimes can help mediate a swing in the market, right? We really get some buying, we get some selling. There's going to be less market participants that could be on the other side of that market. So even though you might be expecting a light volume day, sometimes you can get some exacerbated swings in a light volume day. Now, the computers are always there, right? AI, et cetera, for sure. All right, and we jump over to Novo. Yeah, unfortunate just for humanity. They were going for an Alzheimer's drug. They were trying to use the GLP-1s to help with that. The trial tested whether semaglutide, the active ingredient in Novo's blockbuster diabetes and weight loss drugs Ozempic and Wegovy, helped slow progression, and it did not. Failed to meet its main goal. While the treatment resulted in improvement in the biomarkers, it did not translate into a delay of disease progression. They explored the potential despite a low likelihood of success, and as of now, unfortunately, that is not a success. And you jump over to their shares, and you're down, 13%? Down what, $5? Down $5? 10, 11%? And boy, check out this thing. You're going to open at $42. You're going back to, 2021? Man. It's like, what are you coming into? That's the tough part about this. What do you trade into? Where does this thing find any support? Maybe $35, the beginning of 2021? There's your COVID volatility in March of 2020. This thing spikes to $24. The next year you accelerate all the way up to what? Almost 60? 58, 68. My goodness, I'm going to be at $42. It's probably going to be a big day of volume, and you're going to break down on a volume basis as well. And boy, it'd be difficult to challenge those earnings from the week of July 28th. Those volume numbers, excuse me, not earnings, right? That was the week after? Yeah. They had a disappointment back there in July already. Man. Yeah, be careful of that one. All right, we talk about coals. One of the dogs lately. And I shouldn't say that. It's almost tripled in price this year. I say lately. My goodness, right? The April acceleration, one of the best performing equities out there. Who needs tech stocks when you could have bought coals on the April turnaround? Actually bottomed out a little bit prior to that, but my goodness, from a low of $6 and change up to almost $20. And you take a look at the volume on this. So they got a new CEO in place. Their last CEO, yeah, he was up to some hijinks in the C-suite, and he's gone, giving preferential treatment and contracts to people he had relationships with. But Michael Bender, permanent CEO after a turbulent year. That's a kind headline from CNBC out there. So this gentleman, Michael Bender, he's been the interim CEO. He's now the permanent. He earned the job. He had been director of Kohl's board since July of 2019. Became the interim CEO in May. He had pushed for deals with a vendor who he had a personal relationship. The last CEO, Ashley Buchanan, a gentleman. And yeah, he's got quite a tall order. Now, what's remarkable here is that, anecdotal, okay, but I talked about there's a outdoor mall in Lakeland that is a decent mall, okay? They've got a movie theater, a bunch of restaurants, right? They got an Olive Garden, they got a Longhorn Steakhouse, they got a Starbucks. Oh, we're living it up in Lakeland, Florida, folks. And they got a Kohl's, okay? Now, what's always remarkable is I walk into a Kohl's. I see this all the time, folks, okay? Kohl's is very expensive, in my opinion. And, you look at a chart of TJX. Look at this thing. Friday, you accelerate higher. You have volume. Now, this is towards the top of its channel line. Be careful stepping into TJX right now. You look at this channel line. It's been in 2022. But everybody knows the role that TJX plays, right? They're a discount retailer. Marshalls, TJX, okay? I don't feel like I should be paying Kohl's prices when I walk into a Kohl's for a Nike product. That's just the impression I get, and they're struggling. They got to find their niche. Where do they belong? I feel like if I'm paying those types of prices, I should be walking into like a Dick's Sporting Goods. Okay, you walk into a Dick's Sporting Goods, man, that the whole aura even, right? That, okay, you're in a high-end sporting goods retailer. So I'll pay for the expensive Nike goods. They belong in there. I don't get that feeling from a Kohl's. Now, they just added a Nordstrom rack in Kohl's. Okay, Nordstrom's private. Family took it private again. I said to myself, man, because I saw it happen, folks. I went to Nordstrom rack on Saturday morning. I had to make a couple returns. Saturday morning. I'm there by 11:30. And there were 20 people in line waiting to pay. Folks, 11. Now, this was a big weekend, holiday shopping, right? Everything. I saw it. Even you got the Black Friday sales going online, and they do have some great deals out there, folks. 20 people in line. I thought I was going to beat the crowd. Got out early, had a couple returns, grabbed a Starbucks coffee. Was going to do some returns. 20 to 25 people waiting to check out at Nordstrom Rack. And you know what? Nordstrom Rack, they got some expensive prices in there as well. But it feels like a discount because you're paying for premium brands. You're not buying a Nike shirt that's priced at $40 and you're paying $40. The beauty that Nordstrom Rack gets away with, and this is what Kohl's is going to have to compete with, because I can see they belong in the same exact space. They're in outdoor malls, okay? Nordstrom is coming for Kohl's. I bet Nordstrom Rack could put a property next to every Kohl's and eat their lunch. That's what they're facing. Because guess what? Kohl's, you're paying $40 for a Nike shirt. Nordstrom Rack, they convince you that it's okay because you're paying $40 for a shirt that's priced $65 to $70 in Macy's. We're coming back for the opening bell, folks.
You also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets in the green to kick things off. We got the Russell, barely basically flat. Tech stocks, again, driving this market higher. And how about Google, man? Google up another 3.5%. How about this one, right? You look at these equities on a monthly. How's that for a monthly on Google? It just keeps getting better. Every month, the candle actually gets bigger to the upside, right? It's like momentum's building to the upside, and it's not stopping. Now, the volume, October, 476 million versus 533, and you're going to come in lighter this month as well. You're at 378, but when you're talking about Thanksgiving, okay, and we got just this week, that's it. A week from now is December 1st, folks. Get that shopping done. But yeah, Google kicking it off, up by 3.8% right now. NVIDIA barely in the green this morning. Amazon shares up by 1.6%. Jump over to Microsoft, barely in the green. Meta shares up by 0.7% right now. You jump over to Tesla, up by almost 4%. There you go, Tesla catching a bid. Palantir up by 2%. Some of the more volatile equities recently. You got Robinhood up by 3.4%. We check in on crypto. Coinbase up by 2.3%. And MicroStrategy up $1 this morning for you MicroStrategy big winners out there. No, I kid, okay? The only thing I encourage in these trades, folks, okay, because MicroStrategy is looking pretty rough out there. I get the temptation, right? This thing catches a bounce. You can be at 300 by Thanksgiving, okay? That's the real deal. Get a plan, stick to it, put some stops in, and realize if you're buying this equity, you better believe there's a chance it can go to zero. That's all I'd encourage you the way to think, okay? There's going to be a bounce in this equity now. I was harping on it when it was up to 543, harping on it 406, 430, okay? At all these levels, just talking about the massive leverage risk, and not many people, I think, realized the potential that when Bitcoin pulled back, how exacerbated the pullback could potentially be in MicroStrategy. And it could go right to the bottom of this range, folks, at 100. Okay, but the bounce will be to 300 when it catches a bid because you're dealing with extreme leverage. And of all the vehicles, right, that you can trade Bitcoin in, I personally would not be doing it with MicroStrategy. Just not. There's too many risks out there that aren't quite known, and that goes to even the guy running it. Okay, and everything is great on the way up. He's the king. But this thing has really never been tested. Okay, not to the degree after the run up it's had. Okay. And you look at the run even going when Bitcoin $27 to 543. Okay, you don't get a 20 bagger. Now that's from June of 2023 to November 24. June of 23 to December of 24. He goes from when Bitcoin's trading at what, 25,000 to 100,000, okay? Bitcoin gets a 4-bagger, and he got a 20-bagger. Remember that as this thing heats up, because I think you have more room to go on the downside, especially if Bitcoin struggles, which I think it's going to, folks. You know, you're going to get another bid. Bitcoin's going to be around, but you're having that market getting tested right now. And when the theoretical value of Bitcoin is just what the next guy will give you for it, if this just talking about, we've just pulled back to a 382. Okay, that's just a healthy pullback. You're coming into the strength of last November. Maybe you get a nice test of the 70,000 mark. Maybe you come into this consolidation area. 60,000 would be great. Okay, but don't believe. I know somebody's posted in there about maybe he's on CNBC talking about, yeah, our man Mike, that they're making 500 million a day. I don't believe that for a heartbeat. Remember, this is the gentleman that had all his wealth and they were playing financial games with the books. Okay? And we all make mistakes. He doesn't have to get judged for that forever. Okay? But you better believe it's a risk when you're dealing with a Bitcoin treasury equity that's just banking leveraged Bitcoin, that you really want to be confident. And when he says they're making 500 million a day, I don't think that's exactly how it's going over at MicroStrategy right now. And the only commentary I would have with that is you nailed it on the dot, Mike, with a big LOL when you hear something like that. And listen, there's risks, like I said, okay, and you're going to get magnificent bounces, so you better believe it. But you're trading something like this, folks, you better believe you wake up one day and it could be at zero. That doesn't mean the Bitcoin's going to zero as well. Even Coinbase I prefer. And I just say trade the Bitcoin ETF if you want to get into it, folks, because you get into something like MicroStrategy, I think you're dealing with a few risks that nobody can be aware of those risks. Be aware of the unknowns and risks that you are unable to quantify. And that's a difficult one, and that's what I think is represented there. All right, check in on some of the equities. Novo down by 7.6%. Look at Google, man. It's not stopping up by 5.3%. NVIDIA in the green this morning. Whoops. Oracle shares. Oof. Yeah, Oracle. It's not stopping, man. You're thinking about getting out of Oracle anytime soon. Pick a line in the sand. Because you break below this 200 level, and technically, you got this borrowed here from January of 2025 that goes all the way down to 162, and you're at 196 right now. All right, let's talk a little bit of AI. So Amazon up by 2.1% right now. And check this out. So both Bloomberg and the Journal, maybe they each heard that they were putting out an article and they're going to one-up each other. They both have very similar articles this morning talking about the extreme nature of the debt load that is going to be driven by the AI companies. So you pull up the front page of Bloomberg.com. There it is, front and center, right? Big tech's AI debt wave is threatening to swamp credit markets. You're talking about $1.5 trillion is the number they throw around there. You pull up the front page of the WallStreetJournal.com. Right there, basically above the fold, right? Now, they have more going on. They talk about Marriott out here. They talk about Ukraine, of course. On 2 occasions, the flood of AI bonds adds to pressure on markets. Above the fold, both of them. Now, you jump over the Bloomberg article. There it is. $1.5 trillion by 2028. $1.5 trillion. Yeah. Bond buyers are starting to worry about being compensated for the risks of a bubble in the sector given recent turmoil in tech stocks. Well, you better believe it, folks. You're talking about $1.5 trillion. And yeah, leverage is always the key. You over leverage yourself on a continual basis, folks. A drawdown wipes out everyone. Everyone. The drawdown always comes at some point, right? Leverage, yeah, risk management, crucial element of money management and equities. We'll come right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer, the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got equities in the green, and we're driving higher. Amazon's up by 2%. S&P's now up by 53 points, 0.8% in the green. You got NASDAQ 100 up by 1.5%. Google leading the way, up by 5.6% right now. Microsoft shares up by 0.4%. Amazon up by almost 2% right now. And Meta up by 1.25%. And yeah, jumping back to some of the AIs. This is the Bloomberg story we're talking about. Okay. Excuse me. And you jump to the Wall Street Journal one. And what's interesting here is, check out just some of the visuals. Bond issuance by big AI tech companies, and this is on a monthly basis. It's just going to ramp up, folks. It's the level that this is going to do. I went back in the books and I was looking at, just Googling it. Go do it yourself, okay? Go look at the type of money that Facebook was spending when they went public. Okay, look at in the coming years how much money they were spending on their build-out. This is one of the most technologically savvy companies driven by one of the most ambitious CEOs out there, Zuckerberg. Meta. Now, it's a long time ago in terms of what a dollar's worth. When they went public, you're talking about spending $500 million a quarter, okay? Then they bump it up, $1 billion, right? $2 billion. They've seen nothing like what these numbers are going to be now, okay? This is bond issuance by the AI companies on a monthly basis. You go 18 billion, you go 30 billion, you go 40 billion. 18, 30, 40, extrapolate out. Okay. Now, what kind of yields are they dealing with? And this is the part I wanted to touch on that's most important here. The cost of insuring the bonds using credit default swaps has climbed. Negative sentiments feeding into that. The markets are very connected now. Think about this, right? AI companies are already running the equity market, okay? And now think about the fact that fixed income is going to have to plow right into the debt structure of these companies, okay? And as this gentleman puts it, John Lloyd, global head of multi-sector credit at Janus Henderson Investors. I agree with his take. Imagine, it will be hard for the credit markets to do well if AI stocks are selling off. So think about it. You're going to have AI stocks with an absolute behemoth debt load. If sentiment turns negative on the equities that are driving this market higher, a huge portion of fixed income is going to struggle. Why? Yeah, because it's going to be hard for the credit markets to do well if the credit markets are disproportionately impacted by the debt load on the companies that are selling off. This is the yield premium on long-dated bonds over treasuries. Everything's inching higher. Now, Oracle, you better believe it, from 1.8%, this is the premium, not the interest rate, right? And you're looking at I mean, you talk about long dated, okay? But Meta is paying 5.4%. Oracle's paying 5.95%. Yeah. You better believe Oracle's in it. And this is not even talking about a default situation, right? Yeah. Oracle could issue around $65 billion more bonds over the next 3 years. Other companies have operating in that similar debt market. CoreWeave, they're the lone AI cloud provider with sub-investment grade bonds. Its bonds due in 6 years were issued in July are at 92 cents on the dollar. An 11% yield. Triple C rated bond. Do you know that CoreWeave bonds that pay out in 2031 are yielding 11%? I didn't know that. I would challenge that most, even active investors, had no idea that CoreWeave bonds in 6 years, folks, if yield was that easy, everybody would go get it. You better believe that you have some risk when you're going out there getting CoreWeave bonds paying you 11%. Somebody tells you they can pay you 11%, you better make sure you understand the risks and how you get your money back if they don't pay you, because 11%, that is some premium. And yeah, this equity. It's like everybody forgot how difficult it was to get it out the door early in the year when you sold all the way up to 187. Hindsight, of course, but we get some real excited valuations in AI, and some equities in particular don't have the backbone structure like the big giants out there to survive it. You look at a CoreWeave. Trade lower last week on a little lighter volume, but how was that on earnings, right? You break everything with volume. This chart looks like you're heading back to $35, $40. And then, yeah, jumping on the Michael Berry train, basically, talking about the accounting, right? Favorable treatment of the balance sheet hinges on some convenient assumptions. Now, we've all known for some time that there's a lot of accounting you can do, especially when you talk about depreciation, etc. And you're talking about CapEx here, you're talking about depreciation. And yeah, it's a fair point, because they're going to try and hide all of those losses they can. If you depreciate it and take a longer depreciation out there, guess what? You're writing off less of the cost each year. Meta is building a $27 billion data center in Louisiana, and neither the data center nor the debt will be on its balance sheet. Not bad, right? Yeah. So there's a lot going on with these balance sheets, because they are going to raise an amazing amount of money, and they want to try and hide that as best they can legally. Yeah. Construction on the project's underway. Meta moved the project off its books into a new joint venture with Blue Owl Capital. Remember that same company that was trying to merge their different funds, and now they called that off because investors were revolting? Meta owns 20%. And funds managed by Blue Owl own the other 80%. And last month, a holding company which owns the Blue Owl portion sold a then record $27.3 million of bonds, mostly to PIMCO. Meta said it won't consolidate the joint venture, meaning the venture's assets and liabilities will remain off the balance sheet. Instead, Meta will rent the data center for 20 years. But it will start with a 4-year lease term with options to renew every 4 years. And that structure minimizes the lease liabilities and related assets Meta will recognize, enabling Meta to use operating lease rather than finance lease. It's pretty remarkable stuff, right? I'm going to post this one in the Tiger's Den. Okay? A variable interest entity, VIE for short. As the Dow rolls over negative as we're talking, let's check out this market. All right, we got a little bit of selling. Tech stocks still up 1.2% in the NASDAQ, but check out the rollover in the Dow. Let's check out what's moving this market right now. What do we got? Procter & Gamble's off by 1.6%, Home Depot off by 0.8%, JP Morgan in the red. Jump over the S&P 500. Broadcom, AMD, Micron, Google, Amazon, Tesla, Apple. Dell up by 4%. All right, folks, S&P's up by 27. We'll come back. We'll finish the conversation. We'll talk a little bit of Meta. We'll talk some accounting. We'll come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&P's up by 43, NASDAQ 100 up by 354 points right now. Tech stocks driving this market higher. And yeah, talking about Meta up by 2.1%. But check this out. We'll finish it up, okay? So under these accounting rules they're using, which is putting this joint venture in a variable interest entity. Again, I'm going to post this one in the Tiger's Den, folks. If you're not in there, check it out. I'll post it in the YouTube Tiger's Den as well. But get in that Tiger's Den. And here's the accounting rule, okay? Under the accounting rules, Meta is the primary beneficiary if 2 things are true, okay? If they're the primary beneficiary, they're required to consolidate that venture, meaning they'd have to put it on the books, okay? And so if they're primary beneficiary, it goes on the books. Now, guess what? They've determined they're not the primary beneficiary, okay? But check this out. Under the accounting rules, Meta is the primary beneficiary if 2 things are true. First, it must have the power to direct the activities that most significantly impact the VI's economic performance, okay? You better believe that they are, and we'll get. And the second is that they must have the obligation to absorb significant losses of that vehicle, okay? Or the right to receive benefits. Now, at the first point, if they don't have the power, who does, right? Yeah, Blue Owl has 80% of it, but they're financing Meta's build-out. Meta knows how to build data centers. They're in control of this, okay? This is their venture, even though it's financed by Blue Owl for 80%. And the second test, whether Meta has skin in the game, has an even clearer answer, as the Journal puts it, okay? And I would agree. And you're talking about that basically what they've done is said that they only have a 4-year lease each time, and that they have no reasonable certainty that they're going to continue that lease. You better believe they're going to continue that lease, okay? So, you know, everybody does it as you should. You get in a tax attorney, you take an aggressive approach, okay? You pay what you're supposed to pay legally. You take an aggressive approach, but that's an aggressive approach, folks, and you're talking about all these vehicles. So keep it on your radar. Keep those spikes up. Stay tuned. Basil Chapman's up next, folks. Have a great Monday. We'll see you at 3 o'clock. Thanks, folks.